Okay, morning everyone, and welcome to part two of the series that we're doing. This is one of my favorite strategies. It is really so cool. It's the stochastic, and it identifies the trends, measures the strength of the momentum, all kinds of things that we're going to look at very quickly. So this strategy works for me because it has a proven track record. If we look at it just on the Aussie, and it does work on every market, but just on the Aussie, since the 22nd of November, 31 long trades, 34 short trades, 23 hit TP on the long side, and 25 of the 34 hit TP on the short side. That is an interesting stat. It's a great risk to reward type ratio. But what is more important as well is how many times a day does it trigger. And on average, if we look at it since the 22nd of November, you'll get 2 trades a day. That's on average. So 2 profitable trades in the Aussie. We go for 100 points per trade is great. Yes, we only trade in direction of the trend, and on the stochastic there, the stochastic number I use is 51 for slowing and then 24 for the signal line. If we look at it, when the stochastic is trading above the signal line, trend is up. When the stochastic is trading below the signal line, trend is down. It'll indicate to us when to add positions as well in any time frame. I like adding into strength. When we get into a trade initially, that's the risk. When we write, why not add into that strength? Okay, so typically out of the 61.8 would be a trigger long, and then add to the long at 77, hold. Don't add above 89. And exactly the same on the short side. Break of 38.2, add to the short through 23 and below 11 stay short, up through 11 get out. It shows whether momentum is strong or weak. You can see straight away on the stochastic when it zigzags to its target. Zigzag, very slow momentum, very weak momentum. Compared to here, look at the strong momentum when it breaks out of the 61.8 and goes through straight line up through the 77, 89 levels. That momentum is incredibly strong, and same on the downside. Okay, it gives triggers long or short outer consolidation in the direction of the trend. So above the 61.8 we want to go long, and below the 38.2 we want to go short. On condition we're trading below the signal line, and to go long we're trading above the signal line in the direction of the trend. It provides turning points or change of trend. And for that, very simply, and I've never seen anything that gives me an indication that we're changing direction in this, is when the stochastic breaks down through the 89 or up through the 11. That gives me a strong indication, change the trend. And particularly then when it breaks its own signal line. It's kind of like a confirmation of that, which is very cool. Okay, setting up the stochastic. Let's do that from the beginning. I'm going to get a new chart completely. Okay, for this example, I'm going to use an hourly chart on the JSE, the Aussie. I'm just going to set this up so you can see the numbers I use. The parameters, 50, slowing 1, percentage D 24. There it is. Now, what I've done is I've gone and I've put the Fibonacci numbers into the stochastic, but in essence what we're doing is we're applying the 0 of the stochastic to the 0 of the fib, and the 100 of the stochastic to the 100 of the fib. Those two must tie up. There we are. There we got our levels. We're then going to quickly block the consolidation area. Between 61 and 38. And there you can see it again from yesterday. Above signal line, break 61.8. Up we go. Absolutely incredible how this works in any time frame, any market, but the results will be different for every market. Okay, things to watch out for. I have already explained strong versus weak momentum, the trend above or below the signal line, when to add into positions, turning points, highs and lows, which is down through 89 or up through 11. And then, of course, stochastic is great for positive and negative divergence as well. Trading the stochastic to go long, trend must be up. So stochastic above the signal line. Okay, to go long. Trend must be up, so stochastic above the signal line, break of 61.8. In this particular example, and every market is different, I take 100 points and get out. Stochastic trading below the signal line, trend is down, break 38.2. Take the trade. In the case of Aussie again, I take 100 points and I get out on 5 minutes. Okay, just remember every market and time frame has a different expectancy, so we need to do our homework on every market. What is very cool about this, and we do offer the service free of charge, is that every time the strategy triggers, you can get a signal sent to your trading screen and to your cell phone or your tablet at the same time. Let me just show you that quickly. So on a couple of different strategies, you get signals to your phone. So it's so cool for me because I know the strategy, I trust the strategy. If I get something on the phone, I just take the trade on the phone, put my TP in for 100 points and walk away. Okay, also, we do trade live together. Trading is lonely, so we've got Telegram and we've got Zoom live webinars, trading sessions twice a day. Any information, give us a shout if you want to join it for a little while and just check it out. We're going to be happy to accommodate you for that. Next week will be number 3, and there we're going to be discussing determining the strongest from the weakest currency pairs in various time frames. Until then, have a great week, enjoy the trading, and we'll speak next week.